Good morning and welcome to Stock Market Today. It's Tuesday, November 20th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. And if you're on Stock Twits, I'm over there under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV. And you can head over to ChaikinAnalytics.com/today to sign up for a free email, follow along with this show, and get daily stock ideas all for free. So U.S. equities were lower in Monday's trading as the S&P 500 fell by more than 1.6%, while the NASDAQ and the Russell 2000 underperformed. The selling was most pronounced in the technology sector. Treasuries were stronger with a bit of curve steepening, leading to outperformance by the utility and real estate sectors. The dollar was down on the major crosses. Gold finished up 20 basis points and oil continued to stabilize as it did towards the tail end of last week following a 12-session drop. WTI crude up 90 basis points. So your outperformers were your defensives and your bond proxies, utilities, REITs, financials, consumer staples, as well as healthcare. Energy was in the mix as well. Underperformers were tech, consumer discretionary, and communication services. And as we get to the desk this morning, S&P futures are down 60 basis points after coming under pressure on Monday, again with the bulk of that focus on the continued sell-off in technology. Asian markets were weaker overnight, with China and Hong Kong both down over 2%. European markets are lower as well here this morning. Treasuries are mixed, with some curve flattening. The dollar is firmer versus the euro, but slightly weaker against the yen. Gold is off 10 basis points, and WTI crude is giving back some of those recent gains, down 20 basis points. And really what's happening here is, as I said, futures are trading lower. So we are now testing support. We've identified support in the 2670 to 2700 zone, and we are testing it now. Below that, we kind of have drawn a line in the sand at 2640 to 2650. Should that level break, I think that starts to question the long-term secular trend for the market. Negative data point from an indicator standpoint is that the RSI remains in bearish ranges and is now beginning to roll over. And notice how, most recent rally attempt didn't get above 50, but the Chaikin money flow indicator is holding in a bullish reading. It's a little bit of a mixed sign there. That kind of lines up with this choppy trading that we're seeing, but price is the most important data point. And right now we are testing key support. And what's interesting is, as we'll go through this a little bit later in the show, but as I've been talking about for a few weeks now, it's those defensive sectors that are outperforming. So moving on to our market in a minute, if you're following along with the email at home, here are the 5 key points that I'm talking about in my note to Chaikin Analytics members today. Stocks fall on concerns about the tech sector. We hit on that. NASDAQ lost over 3% on the day. Sector rotation continues to favor defensive positioning, and that's something we've been advocating for a couple of months now. Weakness in consumer discretionary is becoming more intense. We'll talk about that, and futures do point to a lower open here today. If we look at the power bars for the major indices, Dow remains evenly matched. 5 bullish or very bullish stocks for 5 bearish or very bearish stocks. So both of these upticked by 1 yesterday, down 152 basis points. S&P 500, as I said, down more than 1.6%. 60 bulls to 84 bears, still skewed to the bearish direction. NASDAQ, here's that NASDAQ, down 3.29% on the day. 11 bullish or very bullish stocks there, 18 bearish or very bearish stocks. This is where the focus remains. Still some talk, a lot of the reading that I do and a lot of the conversations that I'm having still points to kind of crowded positioning in a lot of these big tech and NASDAQ type winners. As that continues to unwind, we would expect more weakness there. Small caps underperformed, 161 bulls, 478 bears. There's your uptick in bonds, sending yields lower. And according to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks, and the major markets are mixed. Your stock of the day today, again, if you're following along that email at home, every day we generate a idea for you. Sometimes it's immediately actionable, sometimes it's not, but it's always good to start to build your watch list, especially as the market remains choppy. Today's stock of the day is Arconic. It's a metals stock, Ticker symbol ARNC has a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, and attractive financial metrics. And look at this stock. This is something that we like to see. Stock was up 94 basis points yesterday in a major sell-off for the broader markets, closed at $20.34. So as we run through the analysis, very bullish stock, strong trend, but a weak industry group. It's been outperforming the market. Here's our ribbon at the bottom of the screen. This tells us where the power gauge rating is and has been. And really since mid-July, we've been mostly bullish. And somewhere late August, early September, the stock began to outperform the market. So market and model are in agreement. Dynamic Duo are in gear. We're rounding out of an overbought position. Chaikin money flow has been kind of, back and forth. It's neutral. Some of these bearish readings are not very intense. So as I kind of run through a weighted the evidence approach, Arconic shakes out for me as one that looks interesting on the long side. However, given the market environment, I think you can wait for premium setups. And by that, I mean we want to see our overbought, oversold indicator oversold or closer to oversold. So add this one to a watch list. If you're more aggressive and want to get involved here and now, I can't argue with it, but I do think that the market will come your way here. So I'm adding Arconic to a bullish watch list. I want to see an oversold condition. Sector tracker, looking at the movement of the major groups over the last 5 days. Real estate top of the list, up over 1%. Utilities in the top 3 along with financials. Materials seeing a bit of a counter trend rally. If you look at my note today, if you're a Chaikin Analytics member and you read my note today, we do sector rotation and relative strength, and you can see materials are having a counter trend rally relative to the market, but it's still a lot of defensive positioning here. Also, some rate sensitivity with real estate and utilities. Discretionary bottom of the list, and things seem like they're only going to get worse today. Target reporting before the open's trading lower. Kohl's reporting before the open trading lower. That's on the heels of disappointing trading following earnings from Macy's as well as Nordstrom. Middle of the road, industrials, healthcare, and staples. And there's your technology group, been an underperformer. Our industry in focus today is Biotech Services, which over the past 6 months has underperformed the S&P 500 by 17%. And that power bar ratio, which measures future potential, is very weak. With more bearish than bullish stocks, this group is currently ranked number 20 of 21 subsectors that we look at. And as we look at the power bar ratio, here it is, 2 bullish stocks, 76 bearish or very bearish stocks. And some of those indicative, very bearish stocks are Cara Therapeutics, ticker symbol CARA, La Jolla, ticker symbol LJPC, and Sarepta, ticker symbol SRPT. And as always, with early stage biotech companies, I urge investors to, take your analysis further, have a good understanding of what their pipeline looks like, and have a really good understanding of the upcoming catalysts. Are they going to announce data from one of their trials? Are we going to get an FDA announcement? Are they presenting data at a Wall Street analyst conference or an industry event? Those could be market moving events. And by market moving, I mean, you could see the stock go up or down 30, 40, 50% without even, without blinking an eye. So with these biotech stocks, I think you have to take the analysis a step further. But just kind of walking through what we look at, Cara Therapeutics is a very bearish stock with a weak trend and a weak industry group. So we're hunting in the right forest here, fishing in the right pond, however you want to call it. Power bar rating or power gauge rating at the bottom of the screen here shows us we've been on this bearish rating since October, and we're just now beginning to underperform the market. Overbought, oversold indicator closer to oversold. Money flow's mixed, but it's been mostly bearish since the June-July timeframe. Stock is below the long-term trend line, which is beginning to roll over. I think that you can consider Cara as a bearish idea. Once it rounds back into an overbought condition, and once you've kind of taken a look at what their calendar looks like for potential catalysts. But at the very least, I don't think Cara is a name you want to own. Add Cara, CARA, to a bearish watch list. Yesterday's S&P 500 movers, HP, Helmerich & Payne, very bearish stock, but it caught 3 upgrades yesterday, moving the stock up over 2.5%. Molson Coors, no real news there other than it's part of a defensive consumer staples group. ABC, AmerisourceBergen, and some of the other drug distributors up. There was an announcement on Friday from Pfizer that they were going to increase drug prices, so that's a derivative positive for the distributors like ABC. Don't see any real news on Monster to send that one up 2.3%. And Ford was at an industry event down in Miami for autonomous vehicles. Analysts seem to like what they saw there. That stock was up 2.2%. Loser side of the board, there's one theme that I see here. These are all high growth, high momentum, high valuation names that have come under pressure. NVIDIA follow through selling from their earnings disappointment. Align down 9%, big momentum name. Salesforce, tech name. So you have momentum and tech coming under pressure, hitting Salesforce. There are also some cautious previews coming out of the analyst community. Adobe was a momentum name, as was Fortinet. Those stocks down big. You can see the theme. Tech, momentum, under pressure. Monday's earnings surprises: Intuit beat by 17 cents, Agilent beat by 8 cents, and Spectrum missed by 34 cents, all neutrally rated stocks. But the key is the guidance. Everybody knows at this point that the earnings season's been strong. Guidance is the key. Target reported before the bell this morning, as I said, stock trading down 9% in the pre-market as they missed expectations. Kohl's trading lower. TJ Maxx, Best Buy, Ross Stores, all other retailers that are going to report before the market opens today. Consumer discretionary been under pressure. After the close, listen to Foot Locker. It's a bullish stock, but we also care what Foot Locker has to say as a read on Nike. Bearish stocks, Autodesk and Gap also reporting after the close today. So here's that pressure in the NASDAQ. Here's the Qs. They're now testing their October lows. The Qs were down 3.25%. We've fallen below the 200-day moving average, which has gone from rising to flat. Momentum has shifted to bearish ranges, and money flow is ticking back into negative territory, and we could see this personality change in money flow. We really need to see 160 hold for the Qs. Otherwise, I think the trend starts to shift and we turn into a sell the rallies type environment. Momentum names just been under pressure. We've been beating this horse for a while. Remember, when the S&P 500 broke 2873, we shifted our stance. We liked low beta. We liked defensive sectors. The Qs and the names that are in the Qs certainly don't qualify for those two categories. So keep an eye on this key support level that we're approaching for the NASDAQ Trust, the QQQ. Defensive sectors shine. We've seen this chart now. I've shown you staples. I've shown you utilities. And now look at real estate. XLE, the real estate select sector SPDR fund relative to the SPY, breaking out above the 200-day moving average, which is now beginning to round higher. Momentum, this is the momentum of the ratio. It's shifting into bullish ranges. This is partially a function of it being a defensive group, partially a function of interest rates failing to break out and now pulling lower. Defensive posturing by investors, helping the defensive groups, helping the bond proxies. Real estate is one of them. This is a trend change from bearish to bullish. Real estate, utilities, consumer staples, those are the groups that are attracting the most money right now. And consumer discretionary is breaking down. Now, we've been talking about this one for a while. A lot of this strength in consumer discretionary was a function of Amazon. Amazon's a 25% weight in the discretionary group. This is the XLY relative to the SPY. But a lot of our analysis, and we wrote about this extensively in our daily notes as well as our bearish insights notes. And under the surface, a lot of the industries within consumer discretionary were looking weak. Now as Amazon rolls over, the group is rolling over, momentum has shifted, we're starting to break an uptrend line on an absolute basis, and now we're getting reports out of the retailers, and the retailers were a source of strength as well, along with Amazon, right? Kohl's reports today, right? Macy's traded lower, JW Nordstrom traded lower, Target trading lower. Money is going to start to flow out of the consumer discretionary group here as it breaks down on a relative and absolute basis. We've been on this theme for a while. We'll continue to monitor it for any changes. So that's what we have for today, folks. Sign up for that email. Head over to chaikinanalytics.com/today. Free stock ideas every day, and you'll be able to follow along with this show. And if you like what you're hearing here, help us spread the word. Share our link on social media, and we'll see you here tomorrow, 9:15 a.m. Have a great day, everyone.